Welcome, our Oklahoma City and Oklahoma City Metro audience. Tom and I are here today to talk with you about Oklahoma City and Oklahoma City Metro home loans, specifically about the steps of refinancing. You never know when you might want to refinance. You never know if you need to get a major car repair, or you got to get a car, or you got to do something to pull out some of that amazing equity that you've earned on your home over the last 2.5 years. So Tom's going to help us with some of the steps involved in that. Some of it may seem redundant if you're used to the process. And if you are, don't watch the video, or watch it and tell us what we do wrong. Without any further ado, Tom Rosser, man, how are you doing this week?
Josh, I'm doing great this week. You know, the hot weather over the weekend kind of tricked me, and I stopped watching weather. I just assumed it was going to be springtime, but it's a little colder today, and it was a little colder yesterday. It caught me off guard, but I'm doing great. I'm excited about. I think I saw first day of spring in a couple of weeks. I'm excited about the weather change. Spring break is next week for a lot of us, so it's exciting to get out of the cold and into some better weather.
I'm looking at my lawn and going, dang it, I got to get the mower out.
Yeah, that's not exciting. That's the bad part.
How is your run training going? Your marathon's coming up, right?
Marathon's coming up. I looked at it this morning. It's 40 days away. I was up to 20 miles last weekend, so 2 laps around Lake Hefner. Yeah, it's going well.
Do you throw in Hafer Park every now and then, since you're doing Boston with all the hills?
I don't. They keep telling me to prepare for some hills. I think I'm just going to get shocked by the hills and get through it.
A marathon's a marathon, whether there's hills or not.
Yeah.
Wow. Well, what when people go to refinancing, what are some of the reasons that you've seen as a lender that people would need to do a refinance, or refinance would be a solution to a problem?
Okay, so most common refinance questions we're getting right now is debt consolidation, right? So whatever the debt, the reason for the debt is, it could be a car, it could be, HVAC repair. It could be, I just got in over my head over Christmas and everybody got really great gifts, but my credit cards are way high right now. So the process is very similar, right? Where you start with an application. You're going to 2 years of employment history, 2 years of residence history, name, social, and date of birth, so we can look at credit, and then we just see what you qualify for. Generally, we'll look at doing a full refinance, which would be we pay off your first mortgage and then we get you whatever cash or whatever advantage of that equity you want to take out, we get you that. But we also are looking at a lot of other options right now. We can look at what's called a standalone second mortgage, which is very popular right now. And we can also look at a home equity line of credit, another great option for people that are looking to refinance. Now, generally on the refinance in the last 2 years, or I guess probably 3 years ago, we were refinancing people to save them money, right? They were going from maybe a 5% rate to a 3% rate. Well, a stat I heard this morning is that 85% of mortgages right now are below 6%. So the refinance to get a better rate or to get better terms is unlikely right now. You're refinancing to grab equity. You're refinancing to consolidate debt. Those are the main reasons right now.
And that makes a lot of sense, what you're saying there, Tom. It sounds like what I've kind of been saying on the real estate side of things. It's going back to normal reasons to do things, like people they're moving because they're adding or they're adding to their family members, their family household, or there's kids leaving, or something happening that they don't need as much space. So people are now moving for normal reasons, not just because they don't want to be locked up anymore. So refinancing for, you'd mentioned automobile debt consolidation. You'd mentioned credit card debt consolidation. I guess if kids aren't going to Votech, they could do it for college education too, if they don't do the whole buy the house when the kid is born thing, like you talked about on the last video.
college education, right? So we had a guy pull out, he had a house paid off, right? He had a free and clear home. He pulled out a ton of his money to go buy some other properties. He had a great opportunity to go invest in some properties. So he pulled that equity out of the house that's just sitting there, not really gaining him anything, and he puts it somewhere else to hopefully gain a bigger return on his investment. So yeah, you're looking at other opportunities to put that equity to work for you.
And you said the first step is application. And then once they complete the application, then is a phone consultation scheduled? Do they come in and sit down and go over good faith disclosures or something? What's the next step after that application?
The good faith estimate used to be a great document. It got taken over by the loan estimate and the closing disclosure. But yes, so you fill out the application. You can do that 3 ways. You can do that online. I can send you an invitation to do it online. You can do that over the phone, or you can do that in person as well. But the next step would be you sit down with us, and we have a whole checklist that we go through on a pre-approval meeting or pre-qualification meeting, where we say, hey, this is what you qualify for. These are the different terms. And so in that meeting on a refinance, we might say, here's what it looks like if we were to take over the whole first mortgage and get you the equity, right? This is a new first mortgage. Here's another option that we can leave that first mortgage right where it is, and here's a new second mortgage. Another option would be, hey, let's leave that first mortgage where it is, and let's go get a home equity line of credit. So those are kind of the 3 main options that we look at on refinance. So to kind of go into the difference between a standalone second mortgage and a home equity line of credit. Okay, so a standalone second mortgage is truly, let me use the numbers. I work better with numbers. You own a property that's worth $300,000. You have a current first mortgage of $200,000. So you've got $100,000.
It's okay. Just 1 second. We got to wait for the audio to come back. 1 second. Try it again.
Are we there? We good?
Got your audio back. Yes, sir. Yep.
Okay, so you've got $100,000 in equity in that scenario.
Yep.
I can't loan you the full 100% of the value of the property. You know, we're usually 80% of the value or 85% of the value. So let's say we're at 80% of the value. The maximum I can loan you is $240,000. 240 is 80% of 300. I can pay off that first mortgage at 200 and then give you 40 grand. That's a brand new first mortgage. But what's likely happening right now is that first mortgage at 200 has a rate of like 3.5%, 4%. Mm-hmm. So you don't want to pay that off with a new mortgage at 6.5. Mm-mm. So you would leave that 200 where it is, and you go get a standalone second mortgage of 40 grand or a home equity line of credit for 40 grand.
Okay.
Difference between the standalone second and the home equity line of credit, we call the home equity line of credit a HELOC. HELOC, a HELOC.
Okay.
A standalone second, I would give you that $40,000. You immediately owe me interest and payments on that $40,000. It's a fixed rate and usually a fixed term. Now, the home equity line of credit is a different way to get that 40 grand. In the home equity line of credit, you pay what you use. So home equity line of credit is almost like a massive credit card with the 6.5, 7-ish interest rate. So I'll give you that $40,000 home equity line of credit, and maybe you use 10 grand, then you owe us interest on the 10 grand. If you use 20, you owe us interest on the 20. If you use all of it, you owe us interest on all of it. So the home equity line of credit is more of a revolving line of credit, and the standalone second is more of a traditional, here's your set terms.
Do HELOCs have balloons?
Yeah, they can. Yeah. And a lot of times the standalone second has a balloon as well. So it could be amortized over 30 years, but it has a balloon in 15 years.
Wow. That's something to keep in mind. Balloon, folks, for what you don't know, and Tom will have to clarify because I'm not a licensed loan officer. A balloon means you're making payments of X, but whatever the difference is left at the time of the balloons, say 5 years, 10 years, 15 years, you've got to bring it all to the table. Is that a good summary, Tom?
Yeah, but I don't know how many people bring it all to the table. Most people just refinance before that thing balloons. And so balloons are very common in the banking world or in a commercial world where we'll say, hey, we're going to give you a 30-year loan. We're going to amortize it. So we're going to spread the payments out over 30 years, but it's going to balloon in 5. So what it does is it forces you to go back to the bank and renegotiate the terms of that loan every 5 years. Same thing with the balloon on a HELOC, on a home equity line of credit, or a balloon on a SEC. Any balloon, that's what it's there for.
You know what else balloons are good for, Tom?
Spying.
Making sure that's a good one. That's a good one. I like that one. Making sure that the turnpikes never become public.
Well, how's that? Because they just keep fixing them.
They keep refinancing them.
Yes.
When they were supposed to be refinanced, then they were supposed to be the states, but they're continuing to be refinanced.
Okay.
Yeah. Good old turnpike people. But hey, we do need roads and highways, guys. Whether you're pro turnpike or con turnpike, we do need roads and highways. That's just the gist of it. Because as more and more people continue to grow the population, more and more roadways are needed for that. Tom, a great example of an amazing roadway. Do you ever drive over by 2nd and Bryant?
Yeah, it's cleaned up now, I think.
Oh my gosh. It is the best corner in all of Edmond now.
Okay, they cleaned it.
It was horrible for a year. I would go around it. Like no matter what, I would go around it. But I went through it yesterday and it was amazing. It was flowing, it was moving, and it was rush hour. And I was like, I like this corner.
You think ODOT talked to Chick-fil-A or something? They figured it all out?
No, not at 2nd, Brian. I think OU Medical was probably really pushing for that one because of the ambulances and stuff. That was a horrible corner. It was just atrocious. It was the ambulances would have to get in the opposite lane to go through the stoplight, which that's probably standard operating procedure. But now it's not near as clustered as it used to be. It used to take at least 2-3 cycles to get through that stoplight. Yesterday, I got through it on my first cycle.
Love it.
So after they choose which loan product they want, and I'm so sorry, I didn't mean to go on a rant. I know you got another appointment. What is the next step? Does an appraiser have to come by? Do they have to get you proof of insurance again as a lender for a second? What is that next step once they sign off and choose the product they're going to use?
I'd love to make it sound easier than a regular mortgage, but it's not much different, Josh. So yeah, we'll most likely have to do an appraisal. Sometimes we'll get an appraisal waiver, just like on a first mortgage. But financially, you'll have to supply documentation, your pay stubs, your bank statements, we'll check credit. And if we've got questions about the credit, you'll have to answer some questions and maybe supply documents there. The title work is a little bit quicker and a little bit easier. On a second mortgage, but the process as far as applying and jumping through some hoops with us, it's still there. You're still going to supply documents.
Is there a difference between going out full cash out refi 80% compared to on a $500,000 home, for example, a full blown cash out refi up to 80% on a $500,000 home compared to, say, just a $50,000 HELOC on a $500,000 home that's paid off in full? Is the process simpler for the HELOC since it's such a small number and such a large asset?
Let me ask you, which one do you think would be more risk?
The 80% cash out refi on the 500K one. So I would assume that process is going to be far more difficult than just a $50,000 HELOC on a $500,000 property that's free and clear.
I'd agree with you.
What about the underwriters? What do they say?
But honestly, it would come down to, I've got to document income, I've got to document assets, and I've got to clear your credit. So if you have complicated income and you have complicated assets and you have complicated credit, it could take a little more time. If it's really straightforward, it moves really, really fast.
But if you're like an S corp and you're a W-2 employee and a W-2 employee that gets $5,000 a month salary from your S corp, then based on that with no other debt, theoretically, and I know you can't do anything without pulling credit and all those other terms, but that should be pretty straightforward. They're not going to have a crazy, like, you're not going to want tax returns on every single one of their companies. They could just do it strictly off their W-2 salary if there's no other debt on their credit, theoretically.
Theoretically, depending on program and depending on underwriter's discretion, absolutely.
Okay, cool. And it's not like people who have $500,000 debt-free houses want a $50,000 HELOC. It's not something that normally comes up. I was just talking scenarios with you. So once underwriting's done, once title's done, once the appraisal's done, just like a regular loan, they go close on it, or do they close at your office, or do they have to go to the title company to close? How's the closing?
Hey, that's a great question and something I would have forgotten. But yes, you would normally close at a title company. Sometimes we can close them in our office if it's super simple and straightforward. But most of the time you close at a title company, and there's something different on a refinance that you don't get on a purchase. On a refinance, you get what's called a right of rescission. We call it an ROR, a right
3 days?
3-day right of rescission. Yes, sir. So it's 3 business days, but to make it easy, let's say you close on your refinance on Monday. That loan does not fund until Friday. You get Tuesday, Wednesday, and Thursday to change your mind. If you haven't called us or emailed us or informed somebody by midnight on Thursday, that loan will fund on Friday. That's when you have access to your money and your funds, whichever way we set that up. So if we set it up as a lump sum, $50,000 standalone second, you have it right away. If we set it up as a $50,000 home equity line of credit, then it's all set up and you have access to draw whatever you want to draw out of it at that time. But you get a 3-day right of rescission.
That's really good info to know. And that's also on bridge loans too. Just a side note, is that on bridge loans also, the 3-day right of rescission?
We don't do bridge loans, but I would imagine there is a 3-day right of rescission on bridge loans. I will tell you this, Josh, I haven't had anyone rescind in about 17 years. So when I was first kind of getting the career going, I had somebody rescind, and it was at my advice, where we were sitting at the closing table and this person was refinancing, and then they told me they were going to sell their house in 6 months. And it didn't make sense to do what they were doing if they planned to sell their house in 6 months. So we said, hey, let's rescind, let's back out of this thing. You don't need to go through the cost of refinancing if you're going to sell.
Yeah. No, that makes sense, Tom. Wow, what an informative session today. So we talking about refinancing your home, talking about the different options to refinance your home. That was really, really awesome, Tom. Is there any takeaways that people need to know that we may not have covered in today's Oklahoma City home loan frequently asked questions?
No, I mean, call us with questions on refinancing. We love talking refinancing, and I'll just tell you, Josh, we will tell you if we don't think it makes sense for you to refinance. Like we're not just going to say, oh, yep, you want to refinance and you're going to save 1/8 of a point of interest. Yeah, let's go make some money and refinance you. We want to sit down with people. We want to give them a financial plan that makes sense for them. And yeah, I don't know.
And nowadays people need to have a need to refinance.
Correct.
It's not about saving money on the mortgage currently. It's about having a need if you have equity in your home, which a majority of homeowners, if they bought in 2018, a majority of homeowners have equity now sitting there. And like you said, you had a gentleman who had an investment opportunity come up. So why burn cash or cash in some of his treasuries? Why not just take a home equity line of credit on his house or a second on his house, or literally he took a first. He literally just financed his house, right?
He did. And let's say he got 6%, and his home is appreciating at a similar pace, right? So he's doing financially, it was a good move.
Yeah, he can go in on 3 or 4 other deals with 20% down real easy.
Yes.
And get 3 or 4 other assets. So yeah, that makes sense. Wow, really informative. Really appreciate this, Tom. Well, we don't want to hold you up any longer. We know you got a thing. So thank you so much for today, and we'll see you guys, everybody, next week at the same prior time. Tom's got a thing this afternoon. I got a thing. Aubrey and I are going to go look at a thing that we talked about yesterday, Tom. So we're excited about that. It's right next to an airport. We will not become cartel drug members, even though it's right next to an airport. We won't do that.
Are they asking people next to airports to do that?
Well, that's how the CIA used to bring cocaine in Arkansas. But we don't want to say that too loud because we don't want to be suicided.
Is that the Tom Cruise movie? Okay. I saw that movie. That was a good one.
Yeah. And when the reporter brought it up, the CIA then invented the term conspiracy theory.
Okay.
Yeah. All right, Tom. Thank you so much, guys.
Josh,
we'll see
thank
you
you.
next week. And wow. Oh, Tom, your number, if anyone wants to call you.
Call me at 405-751-3800. We would love to be a resource for you.
Awesome. Thanks so much, sir. Everybody, we'll see you next week's video.
Bye-bye.